Hi there, this is the story of BigBear.ai, ticker symbol BBAI. Right now, the market cap is about $1.8 billion and the price close to $5, $4.93. And the most important question is whether BigBear.ai is a great investment at the current price and current market cap. And the answer, you'll find it in this box. During this video, I'll open the box and you'll find the answer here. Now, to understand this answer, because I can show you right now, you have to look at their business and understand how they make money and what's the next steps, their next opportunities. If you look at the revenue over the last 3 years, and more recently, the first half of 2025, you see revenue flat, 155 million, 23, and 24 just a small increase to 158 million. And for the first half is a small decline. So this is a problem. Now their earnings, again, look at this for 2024 or 2022. They're making revenue 155 million. They spend all that money, and on top of that, they reported another loss of over 111 million. Same for 23, 70 million, and for 2024, a higher loss, close to 300 million. Of course, here they also have some changes in the fair value of derivatives, but still, their loss is over 100 million. And for 25, another big loss. So this is bad. You don't want to see this. You want to see a growth in the revenue and lower losses to become profitable in the long term. Another bad thing is the number of shares. It has increased from 120 million, 150 to 250, and more recently, for the first half of 2025, recent quarter, over 369 million shares. And this is called dilution. When they issue more shares, your value decreases over time. I hope you understand what dilution means. It's like this. You own a piece of land, 100%, it's all yours. But next day you find out you no longer own 100%, but 80%. Why is that? Because they issue more shares and you brought in more shareholders, and you have to divide this piece of land with more people, more shareholders. And the more shares they issue, the less you get in value. For instance, if they double again the number of shares, you'll own 40% of this business. And this is quite bad. Now, if this land becomes more valuable, or this business, BigBear.ai, becomes more valuable in the future due to more contracts, higher revenue, and improved earnings, then yes, if the increase in the value of the business or the land is higher than the increase in the number of shares, then you make money. Your value goes up. If not, your value goes down. So here you have to be very careful and understand how dilution works. Now, to assess their future potential, you have to look at what they do, what they offer, what are their services. Ask this question for their products. They offer AI analytics, decision intelligence, and solution services. Yes, you can think of it as Palantir, but Palantir also have some software products. This is more AI services, related to AI services, decision intelligence, and the focus is on US government clients. That's why the association with Palantir. Palantir also have US government clients, especially security and defense. They also have some contracts with other clients, commercial clients, where they focus on supply chain and digital identity. And they're trying to sign new contracts with the US government, maybe also commercial, and increase the revenue and make a profit, report a profit. Now, is this wrong? No, as long as they can increase the revenue and make a profit on their revenue, that will be great. And the next question should ask, what's their total addressable market? What's their potential? How much they can grow? Because you don't want a market where they don't have a lot of money to grab. So if you look at the total addressable market by 2030, it's expected to be between 8 and 48 billion. And compare this amount, let's take the low range, 8 billion, with the current revenue of 150 million. So if they gain a market share of 10%, let's say 10%, they can report 800 million in revenue. This means the revenue can more than 5x, around that level. That would be great. If that happens, also the market cap will go up, maybe 5x or 3x, who knows. And the higher range for the 8 billion, they might, if you go deeper to see this total addressable market is for defense, 5 to 10 billion, supply chain 2 to 5 billion, and AI analytics 10 to 20 billion. Now, you have to take into account the competition because they are not alone. They'll go there in front of the client, try to convince them to sign and offer the services, but there are also other companies that will want to grab a portion of this total addressable market, right? For instance, Palantir, because they also focus on US government clients, especially security and defense, and intelligence, decision intelligence, and also AI analytics. So if BigBear.ai comes up with a lower price and better services, high quality services, they can win more contracts in the future. So it's all about the contracts they are going to get. And then on top of that, you have to think if they're able to make a profit on that revenue, because you have to hire specialists in every segment where they operate for every contract to deliver the high quality services. And guess what? I mean, imagine yourself, you are an AI specialist, right? And ask yourself, will you want to work for BigBear.ai or Palantir or Microsoft or Google or XAI? And the list goes on and on. Ask yourself, because the revenue will depend on future contracts. And to get those contracts, they have to provide low prices and high quality. Because if they don't offer that high quality, you won't get more contracts in the future. And to offer high quality, what do you need? High quality people, high quality engineers. They can deliver high class services, especially in AI. And how can they get those high quality people, high quality engineers? Well, by becoming a great company, but it's hard when you compete with other major companies for great employees. And also, you also compete to gain those contracts. It's quite hard. It becomes quite hard to reach a market share about 10%. Just think about it. Just think. Take a moment and think. How are they going to raise more money? To gain more contracts. Yes, if they have some relationships in the US government, because if you look at the CEO work for defense, US Defense Government, Department of Defense, to be more precise. If they have some relationships, yes, they might have an advantage over the competition. But I wouldn't rely only on that. I want to see some specific services where they have an advantage compared to competition. So we have to be very careful here with this company. And especially dilution. Dilution is a big problem because, yes, the report is loss over 200 million, but you have to ask yourself, who is going to pay for this loss? Well, shareholders, because they raise money from investors and fund their losing operations. For the moment, if you look at the balance sheet, they have in cash 390 billion, 390 million. So if you were 390 billion, this was a bargain, but not the case. And debt 103 million. So they have enough cash, this is good, to fund their operations because they burn around 200 million a year or 100 million. They have enough cash to fund their operations. But going forward, it's quite tough for them to increase the revenue. And so far, you haven't seen any great results. No high growth rate. So to open the box and show you the answer, whether BigBear.ai is a great investment right now, you can see it here. No, the answer is no. Even if they have a lot of potential, be aware of competition. They only compete for contracts, but also for great employees, great engineers. And dilution is a major problem, and that's why the answer is no. Now, if you want to stop losing money in this company and increase your returns, have real returns with low risk, simply go to my profile, press join, and choose Titan Investor. And there you have access to my portfolio. And every time I make a transaction, I will make a new video only for you. And on top of that, you also get an investing course and other in-depth analysis. And by the way, all my investments are up. So I only buy great businesses with a margin of safety. I'm a picky investor and I don't fool around with low quality companies. Now, there are some people that, like BigBear.ai, they don't want to take a look at my portfolio, see my great results. They want to invest in BigBear.ai. And if you force me, give me $1 million and tell me, John, you are only allowed to invest in BigBear.ai and make a profit, what price would you pay? Well, that answer will be available in a new video, but for Spartan investors. You have to go to my profile and join Spartan Investor. And to be fair, the price is much lower than Titan Investor. By the way, if you join Titan, you also have access to Spartan and Gladiator. Same thing for Spartan. If you join Spartan, you have access to Gladiator. So that video, where you force me to invest $1 million, will be available for Spartan investors. See you there.